FedEx stock has crashed over 25% over just the last 6 trading days and has given a huge scare to investors about the health of the economy. It all started last week when FedEx gave an early warning to investors that it would be missing its earnings estimates. This warning is what started FedEx's stock crash and led to a 21% drop in FedEx stock price the next day, which was the biggest one-day decline in the stock's entire history. The company noted in their press release that, quote, first quarter results were adversely impacted by global volume softness that accelerated in the final weeks of the quarter. FedEx Express results were particularly impacted by macroeconomic weakness in Asia and service challenges in Europe, leading to a revenue shortfall in this segment of approximately $500 million relative to company forecasts. FedEx Ground revenue was approximately $300 million below company forecasts. End quote. FedEx also withdrew its guidance for its fiscal year 2023 earnings after they missed for the quarter. The company had previously given this guidance for the year just 3 months before. So the fact that FedEx's business deteriorated so quickly in 3 months was concerning for investors to say the least. FedEx's press release also noted that they expect business conditions to get even weaker in the following quarter, and the company is introducing cost-saving measures to offset these weak business conditions. These measures include the cancellation of certain planned network capacity and other projects, the deferral of staff hiring, and the closure of over 90 FedEx office locations, as well as other cost-saving measures. The market was especially concerned with the commentary from FedEx's CEO, who said, quote, global volumes declined as macroeconomic trends significantly worsened later in the quarter, both internationally and in the U.S. We are swiftly addressing these headwinds, but given the speed at which conditions shifted, first quarter results are below our expectations. End quote. The reason that this is so concerning for the broader economy and the stock market at large is that FedEx is a shipping and transportation company primarily. Because of this, FedEx's delivery volumes are heavily influenced by economic activity and consumer spending, particularly in the e-commerce realm. If consumer spending decreases, companies won't need to ship as many packages to customers or need as much inventory to be shipped to them, which directly hurts FedEx's shipping volumes. Because of this, many investors look to shipping volumes for companies like FedEx and UPS as an indicator for the health of the economy and consumer activity. If shipping volumes are decreasing, it's often a sign that economic conditions are getting worse. This is why many investors are concerned about FedEx's stock crash and the warning that they gave to investors. FedEx's shipping volumes are not an isolated part of the economy at all. The decreased shipping volumes are a reflection of decreased activity in other businesses, and that has investors worried that FedEx could be another piece of evidence pointing to a recession. In an interview on CNBC, FedEx's CEO was asked directly if he believed the slowdown in the business is a sign that a global recession is starting. He replied, quote, I think so. These numbers, they don't portend very well, end quote. He also said that FedEx is seeing a decline in their freight volumes in every region around the world, and he noted that FedEx is also seeing a slowdown in American spending as well. This idea that FedEx's shipping volumes could be an indicator of an oncoming recession isn't a theory without any support either. Analysts at Barclays note that FedEx's earnings have had similar contractions during the past 3 recessions. Part of what makes the company a good indicator for the economy is FedEx's size. The company isn't just isolated to the United States, as FedEx operates in over 200 countries and processes more than 15 million shipments every single day. This global reach and exposure makes the company a great indicator for the health of the global economy, and that's why investors have been paying close attention to and are discussing FedEx's guidance. Be sure to let me know your thoughts about FedEx's stock and the economy in the comments below. And leave a like on the video and subscribe to the channel for more investing and finance content. Thanks.